The company is Radiant Cash Management. Now, before we invite the CEO of the company, Colonel, on the show, let me quickly tell you about the company. Now, this company has three sources of revenue. Majority of the revenue, that's 69% of its revenues, comes in from cash logistics, which basically means on behalf of the banks, the company picks up cash from various outlets like the ATM and then deposits it in the cash of the bank branches. The company gets paid by the banks, and this is a fixed charge per ATM per month. The second business is the network cash management business, which is about 18% of their revenue. Now, this is a premium value-added service where the company, Radiant Cash, deposits the cash in their own bank account and then will electronically transfer it to the client bank account. Now, this will be required in places where the client bank does not have a branch. And here, the company, Radiant Cash, charges the bank based on the volume of cash that has been deposited in their own account, Radiant Cash's account. And the third segment is much, smaller in size, about 4-6% of their revenues, is where the company gives cash vans on hire to the banks for the bulk movement of cash between their vaults and their branches. So this is broadly about the company. So now let me invite the management on the show now. Margins have taken a bit of a hit this time. Will we see a pickup? Going ahead, let's ask David Devasahayam, the chairman and MD of the company. Good morning, Colonel, and thank you very much for joining in. Can you give us the growth outlook for each of these three segments? Cash logistics, network management, and thirdly, for the cash vans business, what can we expect in FY24? Because in FY23, your network management business took a bit of a hit.
Jai Hind, India, and thank you, ladies, for having invited me this morning. Well, as a company, we're extremely satisfied, having grown 24% year on year. And a couple of things I'd like to say that the essence of the company and the greatest strength of the company today for our viewers and shareholders is that we have one of the strongest networks in the country. 21% of our workforce is ex-serviceman driven. So the response times, the integrity, the frugality with which we drive the network is today generating a considerable amount of market interest, even from allied areas, as to whether we can collaborate. And that's been the larger, it's been a very, very exciting thing for us post-listing. And we are looking at it strongly. Now, coming on to your question, we are wanting to continue with our growth in the range of about 19 to 20% year on year. And this essentially comes from the number of points that we service. There has got to be a growth. Currently, we are servicing about 63,000 points. Nationally, 63,000 outlets. And we are hoping to grow at about 1,100 to 1,200 outlets per month. Now, that's the target with which we are going, in which case we will achieve a 19 to 20%. I hear you when you say that the network cash management has, has kind of been flat. But that's largely because the more number of points that we are getting with the organized retail, which is growing very rapidly. Some of the retail chains are growing by 7 stores per day. So that is largely happening in the Tier 1 and Tier 2 centers, and that's why where the network segment is comparatively less, and that's the reason why network has been kind of flat. Now, with regards to cash van, we are really moving for dedicated cash vans. It's an important area of focus for us. And in this year, as you know, that from the fresh issue, we are buying about 220 cash trucks. And this will all be moved towards the dedicated cash vans that we intend using. So cash van is going to be a very major growth segment for us in the coming year.
So in FY24, you will add 220 cash vans, sir?
Yes, that's right. We are currently at about 840 cash trucks, and we are planning to add 220. But there's a difference in that the earlier trucks were all leased by us. These are 220 trucks, which are, a small segment. We wanted to hold our own inventory of trucks, and therefore we are buying these this time, so that they can be held as sectoral reserves, as also be used for the dedicated cash vans and cash van business that we are targeting this year.
Okay, good morning, sir. Thanks for joining us. This is Pavitra. So in FY23, this cash van operation is around 6% of your business. Can you tell us what is the kind of target? Where do you want to get with this business in, say, the next, 3 to 5 years?
Currently, I'm unable to put a number to it. We are just looking at this, and we are currently applying for all the tenders that are coming up, particularly from the national banking sector. One of the reasons why we are looking at it strongly is because the nationalized banking sector, which requires about 7,000 to 8,000 cash trucks, they are now majorly getting into outsourcing. So we feel that this is the right time to look at this segment. And so we are looking at maximum growth in this segment. At this point, we have not put a number to it.
Got it. Sir, can you help us with the margins that you enjoy in each of the segments? Cash pickup and delivery, network cash management, and third, cash van operations?
In that, typically, network cash management is what gives us the maximum margins.
Correct.
As of now, and there is no decline in network cash management. And as we are largely, you will find 63% of our revenue is coming from Tier 3 and Tier 4 locations. And we see a lot of growth in this area as well, going ahead, particularly in the BFSI segment. And so therefore, I feel that this area, which has been rather flat, is going to register considerable growth in the coming year.
And this will come in Tier 3, Tier 4, because you did indicate that most of the growth is taking place in Tier 1, Tier 2, where the business of network cash is not really very applicable because most of the big branches banks have their branches over there. So your need per se doesn't arrive. So what's going to cause the switch for your network cash management business to pick up in FY24?
Network cash management business, what I like to say is that currently, because the retail is growing largely in the Tier 1 and Tier 2 locations and also Tier 3 locations. So therefore, as of now, it's not, because as you very correctly pointed out, we have the bank branches located there. But I'm very bullish about Tier 3 and Tier 4, the way the growth is being registered in Tier 3 and Tier 4. And there it is entirely based on our network cash management.
Okay. You were also mentioning that you're looking to add around 1,100 touch points a month. Can you just break that up and tell us what part of this will be in Tier 1, Tier 2, what part should be in, Tier 3 and 4?
Well, out of the 1,100 points that we're talking about, essentially the segments that we look at is firstly the BFSI segment, from which approximately about 20 to 22% of our growth comes from there. Another 20% comes from our e-com and e-com logistics segment, which is also consistently growing. It is the retail segment, which is today showing a very major growth. And that's what we are consciously tracking. I'd like to draw a parallel with the US retail segment. In the US, currently the organized retail is 85% of the market. And nearly 65% of that is handled by retail cash management companies like us. So here in India, currently we're just touching about 20% organized retail, but there is a considerable and humongous growth happening in this segment. And so it is here that we see a larger growth happening. Besides that, we are looking at cash in transit, that is the cash van business, very strongly. And so that is how this 1,000 points approximately is going to be split in terms of percentage.
Thank you very much, Colonel, for joining in. That's the view coming in from Radiant Cash Management. Get into a break on